share this video so that more people can join us in the learning, because nowadays Facebook makes it super difficult to find the link. Okay, so would you say thumbs up? Yeah. So help to like and share this video so more people can join us. There's a lot of chaos that's happening in the market, and also I've prepared this sharing for you guys. So I hope that more people will be able to share in this learning as well. Okay. And of course, those of you who like and share, you will also, yeah, Sharon, we have gotten started. You all can hear me, right? Okay. Yeah. So for those of you who like and share and then put it to public view, okay? Because if you don't put it to public view, I cannot see it. If you like and share and put it to public view, I will send you the slides from today's session as well. Okay, because there's quite a bit to go through. Great. Good. So let me start sharing my screen. It's been a while. Okay. Okay, now, ta-da! This is it. All right. We are going to decode the crazy markets. And once again, before I get started, just a heads up, right? Some of you know that my Telegram channel is facing some issues after 6 years. So a little bit shocked. I know you guys are shocked as well. But it's also a good reminder that whether it's a platform or whether it's your portfolio, guys, if your strategy is concentrated in just one fragile layer, you are putting it at risk. Okay, same for the market. So if your strategy is built on hype instead of structure, I can tell you that the volatility right now will probably be shaking your portfolio. So today, we are not going to be talking about hype. We are going to break it down. We are going to be talking about what's happening in the macro economics, how to connect these dots, what does that mean for you as an investor so that you can better position yourself. All right. Also, in the meantime, while my Telegram is being settled, I'm opening an exclusive Inner Circle WhatsApp group for those of you who want real-time updated insights. Yeah, I'm just gonna paste it inside the chat. Okay, just for everybody's just for everybody to know. Yep. Okay. So while we are waiting for Telegram to settle whatever issue that is, you guys can join this WhatsApp chat for the most updated market updates, polls, etc. All right, so let's go. Okay, hold on. Okay, once you guys can see my screen, can you all at least type screen inside just so that I know? Okay, can you all see my screen? You guys probably can, right? I think. Yeah, good. Okay, let's get started. And once again, those of you who are just joining us, do help to like and share this video so that we can push it up the algorithm. More people can join us in this learning. Okay. Good. Yep. Okay, so what's happening? The markets are going a little bit crazy, right? If you guys saw what happened yesterday or 2 days ago, Nvidia actually beat earnings. It has set a record on its revenues, but the markets punished it, right? It dived 5%, 5 to 6% overnight. And this is why, within the mentorship itself, I'm telling my mentees all the time, do not try to play the earnings because you cannot guess where it is going, especially when there's rotation in markets, liquidity shifting, which I'm going to talk more about. And I'm going to talk a little bit more about this as well later. What else do we see that's happening in the market? This is insane, right? Gold, silver, worst day in history. Gold plunging, can you imagine plunging 9 to 10%? This is unheard of, right? But steepest single day decline ever since the 1980s. That's like 40 over years. And this shows that there's a lot of frantic chaos in the market. There's a lot of speculation. I'm also going to talk about this, what's happening later. Obviously, we have tariffs, right? So what happened in 2025, the Liberation Day? The Liberation Day rally, for those of you who caught it. Last year, when Trump announced all these sweeping tariffs, the market corrected steeply, right? It sent the market going down. And then what happens now? Oh, Supreme Court says that Trump's tariffs are illegal. So now what's going to happen? Okay. So I can tell you that in this market right now, maybe let's do a little poll, right? If you're feeling confused, right? A little bit unstable, like, a little bit feeling like you're tossed and turned in the market, can you type C for confused? Okay, or if you're steady, you're peaceful, maybe write P, peaceful. If you're peaceful, type P. If you're confused, type C. There's so much going on in the market. Okay, good. Hi, Gabriel. Yeah, okay. So, and of course, there is no shame. I can tell you that there are more people feeling confused right now than steady, which is why I'm running this session for you guys today. Okay. You have to have your customized portfolio strategy and game plan that keeps you grounded that helps you cut through the noise. If you do not want to be like a rag doll being tossed and turned in the waves of the market, and that itself, I'm going to conduct a separate session for it 2 weeks from now, okay, because it's a lot to cover. Today, I want to talk about the market, specifically key themes. So the current market valuation today, guys, as you all know, despite all the volatility that's going on, right, the market is still significantly overvalued based on the Buffett indicator. And based on various research, actually just comparing it against historical data, do you know that the likely returns would be 1% in the next 12 months, the overall market? Okay, of course, we know that all these valuations and expectations are how would I say, it is based on past data. But what it's trying to tell us is that the higher the current market valuation, right, the premiums that you're getting from the market are lower and lower, and therefore you need to thread it a little bit more cautiously. Also, I'll talk about something separately later, right? Not just based on the Buffett indicator, but based on the Shiller-Cape ratio, it also shows that, you see, market is really at one of the all-time highs, I mean, just second to the dot-com bubble in the 2000s, right? This is the second highest valuation ever in the history. So what this means as well, it doesn't mean that there is no opportunity, guys. Does it mean that there is no opportunity in the market? Obviously not, right? There are still opportunities all the time, but it's where are the opportunities and what sort of opportunities fit you. So looking at the overall market, if you're buying the index right now, if you're buying the overall market, if you're buying the SPY, guys, tell me, are you overpaying or not? Is it a wise thing to do to buy the SPY right now, given that it is so expensive? Obviously not, right? So this is the time where you especially need your customized portfolio strategy, because this is the time, if you want to win, you need to be selecting the right winners. This is not the time to be buying broad markets, okay? Good. Okay, anyway, talking about all these various ratios, just for the sake of time, and I do not want to bore y'all with the details, y'all can go and look it up later, okay? But behind each of these measurements are longer-term 10-year average inflation-adjusted earnings of the market, and this is where we determine whether it's overvalued or undervalued, okay? Even when we look at Berkshire, right, obviously we know that Warren Buffett, one of the greatest investors, shareholders of all times, his fund is sitting on a record 380 billion cash pile as of the latest data. And what that means, I mean, he is known to really be very patient in the market. He is also known to be the person that says that the stock market is a perfect instrument from transferring wealth from the impatient to the patient. And he is being very patient now. He is sitting on cash pile such that when opportunity unravels, boom, he has all the bullets to be firing in the market. Now, does it mean that you copy him entirely? Obviously not. Okay, so another thing that I'm telling my mentees all the time is that, guys, don't copy Warren Buffett's trades, because if you want to copy his trades, then you have to copy all his trades. Why? Because do you think he is godlike? Does he make all the right trades? Obviously not. They also, within Berkshire, right, when you look at their funds, the individual stocks itself, obviously there are losers and there are winners. If you want to copy everything, if you want to copy him, you have to copy everything. But do you think it suits your portfolio, guys? Obviously not, because he runs a 12-figure portfolio. Okay, what suits a 12-figure portfolio will not suit a 4-figure, 5-figure, 6-figure, which is why I iterate all the time as well. You need your customized portfolio strategy for your specific size of your portfolio, your life stage, your portfolio goals, etc. Then you determine what sort of percentages of cash you want to hold on hand versus how much you want to invest based off this market valuation, your risk profile, etc. Okay, so this is important. Yeah, all right, everyone following so far? Okay, I hope that you're learning something, because if you really want to be peaceful, you have to be able to cut through the noise and to know what exactly works for you. There is an issue with this right now. Okay, I'm coming back here. Okay, let me share my screen again now. Okay, so can everybody, maybe can y'all type in the chat, how much cash for your own portfolio are you sitting on right now? How much cash are you sitting on? How much percent cash are you sitting on right now as compared to how much is being vested? Okay, just type it inside the chat, because everybody should be different, right? Based off what is suitable for you. And if you don't know what is suitable for you, once again, in 2 weeks' time, I'm going to be conducting a separate webinar that I'm going to open to everyone as well, because I know this time people need support and help. Yeah, and I'm going to focus more on your customized portfolio strategy in that webinar itself. Okay, good. Let me just try and share my screen again, because StreamYard is having a little bit of issues today. Good. You guys, okay, great. We are back on here. All right, so this is what I'm saying. If y'all want, y'all can type your percentage cash inside the chat so that I can comment on it as well, Yeah, all right. Okay, so let's move forward with this. Right. Okay. So there is this global fund manager survey, right? And because I have access to some exclusive research, and I mean, if you're an accredited investor, you tend to be you have access, right? So I do have access to some of the exclusive researchers. Now, this is one of it. Okay, where fund managers survey, the global fund managers survey shows that amongst the fund houses, the thing that brings greatest concern right now is this AI bubble, which we know, right? Because what has happened based on news just the past couple of weeks, this is insane, like AI is sending tech stocks down, right? So what exactly is happening? People are confusing headlines. And I don't have a slide for that. Actually, this is a very important point. Listen to me, okay? Headlines are confusing investors because by right, guys, do y'all think AI should be supporting tech companies or AI will threaten tech companies? Overall, just generic, okay? I mean, just broad based understanding. Do you think that AI will be here to actually help the tech companies grow faster, or AI is here to threaten tech companies? Can y'all type inside the chat? Obviously, AI is here to, I mean, broad based, AI will help tech companies. So, but based on news, the layman investor, right? I don't know if any of you got into that scare where your panic sold, right? Yeah, exactly. Rudy, right? One of my mentees said, enhance. You're supposed to. I mean, AI will enhance tech companies in the midterm, even in the 3-4 years. I can tell you that AI generally will boost the tech companies. But in the recent weeks, based on all this fear mongering in the headlines, it is saying AI, will disrupt, we send all this and that. Yes, true in some parts. For example, in a CRM world, right? AI will really disrupt it. And this is why you have to be very astute in understanding AI, which I'm going to cover as well in my upcoming session. Okay. Okay, good. Now, talking about unemployment rates, right? We want to go a little bit into where is my yeah, we want to go a little bit into the macroeconomics as well. By macro, we mean that, I mean, obviously, retail investors, they are consumers, right? How do people invest? Is when they have active income or whatever income, right, that they're putting into the market. You guys must understand that money flows in a circular way, right? So if unemployment is high, then obviously it's also going to impact the market because sentiments are weaker. So also because two-thirds of US GDP, which then affects the valuation of the overall market, is driven by consumer activities, and consumer activities are driven by employment when you get your paycheck. Okay? Right now, because you guys can see that based on the past 3 years data, that means ever since, kind of like the recovery from COVID, the unemployment rate stays, I would say that it's not extremely high, but it stays high, right? It is at the 4 point something range. So right now, consumer spending is being sustained by the top 10%. Guys, it's just a very small pool, top 10% of income of households. And this top 10% roughly account for 50% of all consumer spending. So that's something that you know. And this is even shown in consumer sentiment or consumer confidence index, right? You guys can see that in the past 10 years, the consumer confidence or sentiment index is at one of its lowest. Now, what does this mean? Okay, how do you read this chart? So you guys can see that right now it's at 55. It's 55. Okay, if the consumers, if this consumer expectation is above, if the index is above 100, generally it is positive, it is optimistic. Consumers are more likely to spend. If it is below 100, okay, generally it indicates pessimism, a negative outlook. Consumers are more likely to save. And it focuses on three areas, okay, this index over here. It focuses on financial situation, how people generally view the economy over the near term, and also their prospects of the economy over the long term. So you guys can see that when consumer index falls, okay, now what do you think is propping up the market then? Because consumer index falls, meaning that people are there's lower propensity to spend, while the stock market is at all-time highs, right? So then what is propping up the market? Okay, you have to ask yourself that. What is happening as well? Okay, so you guys can see, right? So this is mapping the consumer index, the blue line over here, against the red line, which is the stock market, okay, which is the stock market prices, the S&P 500. There is a huge divergence. Do you think a huge divergence is good or not good? Obviously, it is. Can you all type it inside the chat? Tell me. Is a huge divergence good or not good? Guys, divergence between the consumer sentiments and the stock market is not good. Okay, why is that? Because what does it mean? What is, once again, question is, what is propping up the market? It means that there's a lot of speculation that's happening right now, isn't it? Right? And it's fear that's driving the market. So now the question is, with this K-shape, what does it mean for you as an investor? Okay, this over here basically highlights a divide, right, of high income earners and selected companies that will thrive, while lower income groups and the broader sectors lag. Understand? Okay, so now remember just now I said 10% of spenders are contributing to 50% of the value in the economy. So divergence. And what does this mean for you as an investor? Listen up. Can you buy the whole market, guys? Can you buy the whole market? It's now the time to buy ETFs. It's now the time to buy the whole market. The answer is obviously no. No. Okay? This is super clear. You can only buy selected companies or very, very selected sectors if you want to grow your portfolio. And this is exactly the data that is staring at you. This is how you interpret this together with all the other data that I've showed you so far. Okay. And once again, I iterate, it's because market is very expensive, right? So winners will really win. Obviously there's AI that's driving, right? And then you have the spenders, the main pool of spenders. So winners will really win, losers will really lose. And this is why you also see concentration in the market, right? The SPY, it is not equally propped up. There are only two or three industries out of the 11 that's actually supporting the whole market. So with this, okay, right, with all the upheaval that's going on, guess what? Market sentiment, extreme fear, right? People are very fearful now. And do you know that it is really crazy because people are being swayed into greed, right? With all the initial crypto run and all the AI boom and everything, right? And then now it sways to extreme fear. If you are one of these persons, investors or traders who are like who is like a ragdoll that's being tossed and turned in the market, do you think it is sustainable? Okay, do you think it is sustainable? Guys, those of you who feel like a ragdoll, it is not sustainable, I can tell you. So what you need to do is also to ground your mindset. You have to uproot that root of greed and fear that's causing you to do that emotional trading, and you have to start cultivating healthy investors' mindset and habits, okay? Because your psyche and emotions drive your execution. Which is why I tell my mentees as well, you can have the best strategy. I come up with their customized portfolio strategy with them. You can have the best strategy, but if you do not have the right psyche, the right mindset, you will not be able to execute on your perfect strategy. Okay, so those of you who also want to learn how to uproot that wrong mindset, right, that emotional thing, and to break the wrong loop and to set it on a new loop, once again, in that same webinar 2 weeks from now, where I'm going to teach you how to customize your portfolio strategy, I'm also going to talk about investors' mindset, okay, how to break the wrong loop, right, that whole emotional trading thing, and to set the new loops. Because especially in market volatility, I can tell you that so many people are going to lose money because they are speculating the market. But if you want to really win in the market, you need a very solid mindset. Okay, Rudy also knows, right? He's here. Okay, yeah. Okay, and obviously, okay, so you see what's happening, right? The whole reason why, and that is why I'm saying that you guys cannot look at factors individually. The factors are all linked. There's a lot of volatility, which is what I covered just now, right? All the there's tariffs, etc. The AI disruptions, market is overvalued, etc. Now people are running helter skelter. Where is the safe haven now? I haven't even talked about the whole de-dollarization, right, of this USD, because Treasury is holding one of the lowest amounts of USD in its history so far. So then people were afraid, de-dollarization. So boom, what happened? They think that USD gonna crash. So they're putting money into gold. Okay, so once again, it's a money flow, right? Put their money into gold. So boom, insane, this kind of spikes in gold you hardly ever see in the history of gold. But also, what happens? So fear is up. People fear volatility. People fear de-dollarization. People fear inflation, etc., etc., etc. Pump it into gold, and then boom, right? Crash. This is considered a crash for gold, by the way. Historical. Once again, you've never seen this ever since 1980s. That's like 40 over years. Gold plunged 10%. So now, all these people who are first pumping their money into gold and then dumping their money, do you know what caused this plunge or not, guys? What caused this plunge? Tell me. What caused this plunge? Just now I explained to you guys what caused the spike. But now, can y'all tell me what caused this plunge? Okay, and while y'all think about it, I want y'all to help to like and share this video. Okay, help like and share this video, so that more people can join us. Okay, and just now also, okay, I think maybe I can do that. Here. Okay, those of you who like and share this video, because I've gone through a lot of data today, those of you who like and share this video, you will get my slides from today, okay? And put it to public view so that I can see that you have shared it. And this is what I was talking about. Look in the chat right now. I hope that it's loading. Yeah. Okay, here, this. Okay, so look in the chat, because just now I talked about mindset, I talked about greed and fear here, right? I talk about greed and fear, I talk about what does this mean for you. You have to select the right stocks in your portfolio, right? Because of all this, okay? Very, very important. You even need to know for your portfolio how much cash versus vesting. Not everybody hold the same amount of cash. You cannot follow Warren Buffett. You cannot copy your friend. So if you want to learn how to customize your own portfolio and to really deal with your mindset so that you are not tossed and turned like a rag doll in this volatility, the workshop 2 weeks from now, the link for the sign up, the registration link is inside the comments chat. Okay. This is really to help you. If you want to come, you come. If you don't want to come, too bad for you. It really is like that. Okay. Okay. Now, let's come back to this. All right. So I've dropped the link inside the chat. You guys can sign up for that workshop. And also, those of you who just joined, Telegram, we're still trying to fix that issue over there. So, important, stay within the Telegram group. Please don't exit it. Okay, right now, I need your help. I need your support to bring stability to the Telegram community while the team is reviewing it. And for those of you who need live updates, right, you don't know what's going on in the market, there is also the WhatsApp group. The WhatsApp group that I'm doing live updates at. It's on the scroll. Okay, or if not later, I can also paste it inside the chat. Okay, now coming back to this, what has happened in gold, right? It is super crazy because now rumor says, right, that a hawkish Fed is going to be nominated. So what does a hawkish Fed mean? Hawkish Fed means that okay, they are going to prevent de-dollarization. They're trying their best to prevent de-dollarization, right? If you prevent de-dollarization means all these people who initially because of the fear mongering, nominate. Yeah, okay, so David, because of that, they're saying, oh yeah, the de-dollarization in the end it wouldn't happen. But all this is speculation because obviously Treasury once again still holds one of the lowest amounts of USD so far. So now because of all these rumors that say, oh, hawkish Fed is going to come in, de-dollarization now is boom, I'm going to take my money out from gold that was initially driven by fear, right? Now they're greedy again. I want to take my money out of gold and put it somewhere else. So do you see what's happening? It goes back to mindset, greed and fear, and a lot of reaction to news. Okay, so you have to cut through the noise and ask yourself what is really suitable for you. Gold is not for growth. Gold is really just for store of value. If you guys are retirees, fine. But if you are a young working adult, if you are a young family, if you're a mid-career professional, I can tell you that unless you're holding, let's say, a mid-six-figure portfolio, right? Gold really shouldn't be such a priority for you, depending on the portfolio size, portfolio goals, etc. Once again, okay, which I'm going to cover in the other workshop. Understand? So you guys can see, right, how people are being swayed by news. Let me come back here. Yeah, how people are being swayed by news, okay, and you do not want to be one of them. What's happening as well? You guys can see that the yields, right, remains at 4%, which is not bad, right? So as compared to, let's say, putting it in a market that's so risky now, maybe some people might think that, I want to put it in bonds because it's not so bad, right? The risk-free rate is not so bad. And then what do? They withdraw money from the market. And then it causes another volatility, another dive in the market. Okay? So money flows, once again, it flows between bonds, even between crypto, stock market, commodities, right? And you guys must understand that all these factors interplay. Okay. Another, without overwhelming you guys, I've gone through a lot already. There is also what we call the composite PMI, which is a purchasing managers index in the US. Long and short of it, if it's above 50, it means that there's a forecasted expansion in the market. If it's below 50, it's a forecasted contraction, okay, meaning getting smaller. So what we can see is it's not too bad. It's above 50, so it's considered like in the coming times they're expecting an expansion, right? When you talk about sales, new orders, employment, inventories, prices, etc. Having said that, right, you can see that it's a decline. It is declining. The trend not good, okay, while the absolute number itself is not bad. So this is where you have to be as well very astute as an investor, right? What does this mean for you? Tariffs, because of Trump's crazy tariffs, which now, right, Supreme Court ruled that it's illegal. So they have to refund money. This is such a joke. Okay, so when they refund money, I can tell you the next day, there's going to be some volatility in the market as well. So 2026, at least in the first half, even maybe 3 quarters, no one knows, it is going to be volatile because of all these different factors, right? And earlier, towards the end of last year when the tariffs was still, when they were still trying to come up with all the various settlements, etc., and agreements, I was telling my mentees that, hey, these are some of the largest importers or exporters, in which trade is happening and where tariffs are most, the industries and the countries that are most impacted by the tariffs and, all these different sectors over here, which is why obviously you see companies like Tesla, just like Foong, right? You see companies like Amazon, or you see companies like Apple, right? Because all these are what, computers, phones, right, cars, they are most impacted by tariffs. And many companies also rely on China, right? And because of the tariffs, right, all these US companies had to shift their supply chain into the US, which then spikes cost of business, decrease profit margins, and then it sends the market again swaying. So very, very important. You have to understand what is happening in the market, and you have to understand what is your risk appetite, what is suited for your portfolio or not. This is not the time to play the entire market. Understand? You have to select the right subsectors or the right stocks, most importantly, if you want to see growth, which is why I'm conducting that session 2 weeks from now, okay? So if you need help, if you want to come and learn, to just help yourself, okay, you can sign up for that. The link is in the comments. We can go on and on talking about interest rates. This is something that I've also shared with my mentees Q4 last year. Okay, obviously interest rates also expected to be cut this year, but the long and short of it is that over time, what you see is that, guys, there's a lot of speculation when it comes to interest rates, right? Because based on historical data, basically what we are seeing is that sometimes market prices in the interest rates already. Sometimes market lags in its reaction to the cutting of interest rates. Okay, so you can never guess the market. Same case like Nvidia, right? Nvidia, revenue soared. Okay, they beat earnings, but what happened? The market still punished it. Similarly, do not try and guess all this interest rates thing. Essentially, okay, lower interest rate just means lower cost of debt to expand the company, spur spending, etc. Right? But at the end of the day, please do not guess the market. Stick to your customized portfolio strategy. Okay, this chart basically just shows you the earnings by different sectors and how that compares to the estimates. And what it shows is just that, basically what it shows is selected industries have beat earnings, right? And selected industries have underperformed. Obviously, IT is very strong, right? Tech, and then financials, consumer consumer discretionary. Interestingly, but I can tell you that this is not going to be for long, okay? Because the consumer index is falling. So this is how you join data, right? For example, consumer index falling, consumer discretionary is the last thing you are going to spend money on. Okay, so this is not one sector that you should be looking at, for example. Okay, so even talking about AI, right? Do you know if Nvidia is for you guys? Nvidia is very, very, I can tell you that obviously it has high growth, but it also has high volatility, which is why if you're following me on my socials, my Instagram, Facebook, wherever, I'm posting these different carousels to explain to you guys what exactly is happening behind the scenes. What is the kind of volatility that you can expect? Okay, so you have to ask yourself, if it doesn't fit your portfolio, please don't chase it. If you don't know whether it fits your portfolio, come for the session. Come for the session 2 weeks from now. Okay, also on a Saturday, 2:15 p.m. All right. So be very, very careful. There is also I'm also going to talk about AI trifecta, because AI itself is very, very broad. We cannot treat AI as a whole industry. And I've also broken it down in my social media carousel. So more information is over there. More analysis is over there, where I explain, okay, chips, and then you have computing, and then you have your semicons, etc. But you cannot treat AI as a whole bucket. Okay, so that's very important. You have to understand what suits your customized portfolio strategy, how to execute on it, and what should absolutely stay out. I can tell you that I know so many people who are having Nvidia stocks in their portfolio right now, but they have literally lost money on it because they cannot take the volatility, panic sold. Okay, and then later they try to get in again when the market is rising, as in rushing up, and in the end, panic sell again. Okay, so this is not, if you cannot stomach that sort of volatility, I can tell you this stock is not for you. Some sectors to watch, obviously energy because of data centers, right? Defense and aerospace because NATO has increased defense spending to 5%. Obviously infrastructure because of AI, right? I'm going to talk more about that later in another webinar. Very importantly, Warren Buffett says risk comes from not knowing what you're doing. So please know what you're doing, guys. If not, get yourself educated. Okay? Risk really comes from not knowing what you're doing. So if you're feeling uncertain, the only way you can bring down that worry and uncertainty is by getting yourself educated. And obviously, how do you sleep soundly? Number one, you have to have a game plan. In this condition of the market, you need your game plan as a grounding tool. So no, this is out of my portfolio. This is out of my portfolio. This is just rubbish news. I cut it out. I focus on my game plan, sleep soundly. Okay, proper entry exit rules, cash holdings. You need it tailored to your risk appetite. You need to position size, not all eggs in one basket. And very importantly, your mindset. Okay, I cannot talk more about it. I tell you, it's super, super important. So if you struggle with any one of this, okay, guys, if you struggle with any one of this, once again, you're welcome to join me in this. Okay, the title of my workshop is, this is very broad-based, but basically that workshop itself, I'm going to focus in teaching you all on customized portfolio strategy, on mindset setting, right? And also how to cut through the noise when it comes to selection of stocks. Okay, so very, very important session. Just do yourself a favor if you want to join. Once again, the link is inside the chat. Let me paste it here. I'm pasting it inside the chat again. Yeah. Okay, so for example, Rudy, because Rudy is my mentee, right? He has higher risk appetite and he has already gotten his customized portfolio strategy, etc. We've gone through rounds of his execution, right? So he knows Nvidia, for example, fits him. Okay, but I can tell you once again, it doesn't fit everybody. So guys, if you want to learn, right, your customized portfolio strategy and mindset setting, etc., critical for this year, just do yourself a favor, register on this link over here, and then and also, okay, once again, while I am waiting, you guys can do a screenshot. I'm also just going to paste all these different links inside the chat. This is the time where I want to give y'all all the support that you need because markets is very volatile. Having said that, I know people are telling me they're shocked. I'm also very shocked with what's happening with the Telegram. So I've also come up with a new, like a exclusive WhatsApp Inner Circle community. Okay, so y'all can just join this WhatsApp Inner Circle community for exclusive polls and real-time updates over there. My email subscription, right, is for deep dives. It's for more detailed analysis, exclusive reports. Okay, so y'all can also subscribe to the email, Facebook page as usual, and also YouTube. Okay, so some of my 90 to 120 seconds, like just 1 to 2 minutes, but it will really give you insights into the market. So you can also follow that. All right. Can you help by just typing one thing that you have learned from today? Can y'all type one thing that you have learned from today so that I know that my time over here is not wasted. For those of you who want the slides from today, once again, help to like and share this video. Okay, like and share, put it to public view. Once I see who has shared it, then I will send you the slides from today because there's a lot of data in it that's important. Okay, and before you go, type one thing that you've learned from today as well. Okay, type one thing that you've learned. I want everybody to type it. Okay, so I don't want to hold you up. Type it inside the chat, and then I will read the various comments. All right. Invest safe during this time. I hope that today's session has really highlighted the importance of having your game plan for this year that's customized to your risk appetite, portfolio size, goals, investor psyche. Okay. And then I will catch you all in all these various channels over here while we patiently wait for Telegram to settle the issue. Do not exit the Telegram group, guys, because the stability right now will really help me and help us in getting back this channel. Okay, so don't exit. And then I'll see you all 2 weeks from now for the session on customizing a portfolio strategy, on mindset setting, etc. Okay, good. All right, wishing you all the best. Take care. Hello, Adrian. Adrian has done so well. I just want to share with you guys. Adrian is one of my mentees. Literally, Adrian went through the dot-com bubble, 30 years in the market, right? Flat portfolio. He came for mentorship 4 months. 4 months, yeah, 4 months. 54% ROI. Okay, he's sitting on $250,000 portfolio now. Fantastic. Very, very proud of him. Okay, and just so many wonderful stories. So I wish you all a good weekend, and then I'll see you all 2 weeks from now. Bye.